Hey everyone, this is Ryan Mallory for SharePlanner.com. I'm going to do a video today on HLF, why I am okay with not trading this stock today despite it being up 6%, and being okay with the fact that I didn't take it yesterday when I was really looking long and hard for a reason to take this stock. I didn't do it though. I'm okay with that. A lot of traders, they'll allow that to eat them alive, knowing that, oh, I could have had this yesterday. I knew I should have bought that stock. And it's up 6% today. But I didn't do it, and I didn't do it for good reason. And the reason why, you see, trading isn't about hitting these stocks and saying, oh, man, I nailed that stock pick. Oh, this guy's got really good stock picks. He knows what he's doing. It's not about stock picks. 10% of your trading success can be attributed to the stocks that you trade, okay? The other 90% is how you trade them. Okay, it has nothing to do with the actual stock itself. And I'm about to say something that's going to sound pretty pompous. And I'm ready for you guys to accept it as being pompous, but here's the fact of the matter. I can take your stocks and beat you at trading my stocks, and I can take my stocks and beat you at trading your stocks. Basically meaning that whatever stocks that you trade, I can take those same trades and let you trade my stock picks, and I'll beat you at it. And then I will reverse it, and I can take the stocks that I trade and beat you at the stocks that you trade. All right? That's cocky. That's pompous. I recognize that. But the reason why I say that is because not that I have some kind of magic formula for trading stocks, or that I am got this ability to force my will or whatever I want on a stock to do what I want, to submit to my will. It's not like that. It's basically the fact that I recognize successful trading all comes down to the management of the trade. Where you get in, not trading a stock when you shouldn't be trading a stock. When you get out, booking profits, cutting losses. It's all those things. It's not about HLF. It's not about Apple. It's not about Google. It's not about calling market tops. It's not about any of that stuff. Yet people will jump around from services to services trying to find this guy that has these great stock picks. And if it's a successful trading service, it has everything to do with how they manage the trade. Now, HLF, case in point. All right, yesterday I saw the stock. Actually, I saw it the day before that. I saw it on Tuesday. I was watching this one. Okay, when it formed this little doji and it looked like it wanted to pull back. Now it has a double bottom, and then it starts rising up. It confirms. It breaks out, pulls back. Now it pulls back to the $50.50 level, which would actually have been a good pick for me, but I missed that opportunity. Okay, I didn't actually get into it at that point. So then when I start paying attention to it, it's around $52 a share. Now there was a part of me that said let's buy it, but I didn't. Now there was another side of me that said, well, I can buy it at $52 and then put my stop at $50.55 and only have like a 3% stop loss on it. But HLF, and honestly, 3 to 4% stop losses, 2 to 4% stop losses, that's like my bread and butter right there. That's where I want to get long, or that's the kind of stop loss that I want to employ. But I didn't like where I had to place the stop loss, because intraday I felt like that this thing could have a, if the market sold off at the end of the day, I felt like that this HLF could easily just crush right through it, and then I'm out 3%. And it just felt like an unnecessary risk at that point. Now, if I could have put my stop loss, say, under 48, let's say 48.74, that would have been fantastic. I would have taken that trade all day, because then, at least then, if it goes below that part, you have somewhat of a support level. It's dipping back into where the double bottom was being formed at. And you know to get out at that point, and that there is something dramatically changing about this stock that does not warrant me being long on HLF anymore. But if I had just put it right here at 50.32 and gone long at 50.22, well, it could hit that place, but the trade is still a valid trade to be in. So put in a stop loss at that level really doesn't make much sense at all. So that's why I wouldn't want to get out of it. The other thing too is you got to be cognizant of this rising trend line in the stock. Okay, now I would have loved to have been able to put it, when it was at 52, I would have loved to have been able to get in and put my stop loss below here, but then you're talking about a 6% stop loss on the trade. Now you're saying, well, you're up 4.5%, but you gave up 4.5%. But look, check this out though. If I did that consistently, I would lose money in the long run because I'm going to be wrong on stocks numerous times throughout the year. I'm typically about 50 to 55% right on my stock picks. The bread and my bread and butter, my trading secret, my holy grail is in my management of the trades. So this stock is only up 4.5%, good, and it's already started selling off at its highs. Now, let's say I had gone out for 6%. Well, then I had risked 6% to gain 6%. So really, it's like a zero-sum game. If I'm going to be right, 50 to 55% of the time, I'm not really going to be making that much profit off of those kinds of setups in the long run. Okay, and if you throw in the Bollinger Bands, let's add those to this chart. Look at that. Well outside the Bollinger Band, you can see the last few times it's been outside it leads to selling almost each and every time. Look at this one, it just touches it and it had a heavy sell-off intraday. So to the top side, I would have been tempted to take my 6% gains, but I would have had to risk 6% to get that 6%, and that is just not a good trade, my friends. So now let's remove the Bollinger Bands. Had I been able to get in at, say, 50, trying to do the math in my head here. Let's say I could have gone in around 50.92 and it would have been a little bit more. Let's say I could get in at the lows of the day yesterday. Okay, I know that's a pretty hard thing to do, but let's say 50.62 I got in at. Okay, I could have put my stop loss at 48.73 and then been risking less than, that's probably what, less than 4% or so. Yeah, less than 4%. And the stock, if it had gone up, 6-7%, then I'm actually getting a 2% or a 2-to-1 return for, I make 6-7% for risking 3.5-4%. So not quite 2-to-1, but it's a much favorable odds, especially when you consider my track record being right 50 to 55% of the time. I do that consistently, then those gains are going to be really impressive throughout the year, because I felt like, just with HLF, it was very easy for me to get stopped out on this before the end of the day, and I felt like it was an unnecessary risk. The stop loss wasn't at the right place that I wanted to be at, so there was no sense of taking that trade. Now, had I been able to get into the lower, or like the mid 50s, the trade would have been perfect, and I would have been, making some solid coin off of that, and I would probably be up about 7-8% because I got in at 50, and it's up at almost 10% at this point. So recalculate that risk to reward. It's almost like 3-to-1 or 2-to-1, and more than 2-to-1, I guess you would say. So, all right, that's going to be it for today. Y'all have a great rest of the day, great day of trading, and God bless you all. And let's close out this week solid.